What's going on, everybody? It's Joe Giunta with Trend Trading Academy. I'm here to help you trade and get paid. And in today's video, I'm giving you part 2 to the one I dropped just a couple weeks ago, showing you how to use price points and price zones for big profits. I'm giving you part 2 because in the first one, I gave you a lot of really good information. I gave you some things. I needed you to be able to kind of digest that a little bit. I needed you to be able to kind of practice that a little bit. But now I'm giving you the next part of that. That's going to help you to understand how to really apply it and really see the bigger picture. It's going to be powerful. It's going to help you to take your trading to the next level. Don't forget to like, comment, subscribe, because look, guys, you know I want to bring this stuff to everybody. And the more you like, the more you comment, the more you subscribe, the more YouTube helps me to push this out to see more people, and more people are going to be able to get help the same way you guys are. So help me out, help them out by liking, commenting, and subscribing. Become a student at trendtrading.academy. Get your merch, tradinggetpaid.com. For now, I'll see you on the charts.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trade and get paid, 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 trade and get paid.
So imagine if you're trying to, and now I'm back on Zoom, so you know my straight lines, my beautiful straight lines. But if you're trying to come and measure this, right? And you're trying to figure out, okay, how long is this? And I need a straight line. Well, if you start out nice and straight, right? Then by the time you get on here, you could probably be right here. Everything's good. But if you start going off this way from here, even if it's only a little bit, if you follow that straight line, well, guess what? By the time you get down there, you're way over here. You're off because you had a little bit off over here. You're going to be a lot off over here. All right. I hope that makes sense. So the reason I say all that is it's very important that we understand that when we're charting and when we're looking at everything, we have got to make sure that we start right. All right. We got to make sure that we start accurately. All right. And we're looking at GBP 4 hour, GBP AUD 4 hour. You already know I love GBP AUD. So here's what I want to know. Based on what's on my screen right here, what does this look like to you? Does this look like a consolidation, an uptrend, or a downtrend? Let's go to beginner class for a moment. All right. Based on what you see on the screen, that looks like a downtrend. All right. So now here's the problem, and this is where most people mess up. We are looking at this and we say, ooh, it's a downtrend, so we expect maybe to continue. We hear things like the trend is your friend. We hear things like trade with the trend. And we just ride with that, and that's everything to us. But here's the problem, is that we need more information than that. All right? We need more information than just what we see right in front of us, right? So what we have to do is if we just look at this based on what we see a downtrend. However, watch this. As we start to zoom out a little bit, right? Now look. Remember, now let's look at this for a second. This is what we were looking at just now, right? This is what we were just looking at right here, that little zone right there. So now look at it. Now we realize, wait a minute, that's not a downtrend. Now we realize that was actually just a pullback on a bigger uptrend. Now we realize that, yeah, sure, we see a flag there. I see somebody commented flag. I pulled up the chat. I see somebody commented flag. Yep, that's good. So we see a flag. But what does a flag mean? It means that we have up, pull back up, right? So A, B. So if we look at that like this, right, we have A, B, C, D. right? So what's that? That's an uptrend. So what we saw right there was really just a complex trend or a counter trend. But when we look at it as the whole picture, what we're seeing is we actually see a pullback on a much bigger uptrend. That's why what is so important that when we look at the charts, we're not doing this. Let me help you real quick. I see people trying to trade and we're looking at like one little piece of the chart. We're looking at like this, right? We're looking at this thing like this, especially for those of you who are looking at like the 30-minute chart. I'm seeing you guys trade and I'm going, and y'all are like, ooh, look, downtrend, downtrend. But you're only using that little piece of information. Drop a little line on it and let it rock. But that's not enough. So here's what we do. That's where top-down analysis comes in, right? That's where we have to understand top-down analysis. So I realize most people in here are probably day trading and scalping. So I'm gonna take you from there. So here's what we do. Zoom out a little bit. That's it. Zoom out a little bit. Let's look at the bigger picture, right? Look at the bigger picture and see what is happening on the bigger time frames, not starting at the one you trade. If you're going to trade the 30-minute chart, that should not be where you start. Now, you know I'm a swing trader. I like to trade the 4-hour chart. I like to trade my entries off the 4-hour or my retest entries off of the 1-hour. But I don't start with the 4-hour chart if I'm a swing trader. I start with the weekly chart if I'm a swing trader. And I want to see my weekly and monthly zones. I want to see how the daily is reacting to the weekly and the monthly zones. And then I want to execute my breakouts on the 4-hour or my retests on the 1-hour. But if I'm a scalper or if I'm a day trader, I'm trying to trade the 15 or the 30-minute chart, that's a lot of information. If I'm trying to look at the 15-minute or the 30-minute chart, and then you trying to start at the weekly, man, that's a lot of information. So let's think about that for a second, right? Let's do some math. All right. Let's look at this for a second. Let's do a little bit of math. All right. So where's my annotation? Ooh, I have annotation again. So if you have a 15-minute chart, now let's compare that to the 30-minute chart. Don't y'all miss my beautiful handwriting, don't you? All right, so if you have a 15-minute chart, how many 15-minute candles are going to be in one 30-minute candle? Plain and simple, right? So there's 2 15-minute candles for every one 30-minute candle. So that means how many 30-minute candles are there in every 1-hour candle? All right, we got more 2s. All right, now let's take it a little bit more complex. How many 1-hour candles are in a 4-hour candle? I mean, this is pretty simple stuff. I'm taking you back to basics for a moment. How many 4-hour candles are in a daily candle? Boom. Man, y'all are math experts in here. How many daily candles are in a weekly candle? Boom, y'all got. So you don't need me to keep exhausting this. So watch this though. Now let's take it to the next step. If you see that there are 2 15-minute candles inside of every 30-minute, but there's 2 30-minute inside of every 1 hour, then how many 15-minute candles are in 1 hour? Boom. So if there's 4 1-hour candles inside of every 4-hour candle, and there's 4 15-minute candles inside of every 1-hour candle, how many 15-minute candles are in a 4-hour candle? Hey, boy, we're doing some algebra up in here today. X equals what? All right. So now watch this. If we know that there are 6 4-hour candles in a daily candle, and there are 16 15-minute candles in a 4-hour candle, how many 15-minute candles are there in a daily candle? Oh, y'all a little slower with that one. Y'all a little slower with that one. Hey. There he is. All right, 96. All right, cool. So, now, if we know that there are 7 daily candles inside of a weekly candle, and there are 96 15-minute candles inside of a daily candle. How many 15-minute candles are in a weekly candle? Kyle Preston with the mind blown. My head hurts. All right. It's 672. So think about this. For one of these, there's 672 of these, right? 672. So I say all that to say this. If you see one candle, boom, on the weekly chart that looks like this, maybe it has a little wick, and maybe it has a big wick down up on the top. And let's just call this a blue candle, right? It's a blue candle. It went, I'm sorry, a red candle, right? So that means this candle, if this is red, started here. Again, this is beginner class right now, right? It started here, it ended here, its lowest point was here, and its highest point was here. So the likelihood is that when this candle opened up, it went up, turned blue, went down. Oh man, that was beautiful, wasn't it? It went up, it went down, it went right, and it ended up closing right here. Oh, look at that. Y'all love my handwriting. So that was the whole life of the candle. Now, if we look at that one candle in 15-minute intervals, that's 672 candles. So we're talking about something that looked like it went up, right? And you know that didn't go up without pullbacks, right? So it was up, right? Then it was a steep drop off. Then it went up, right? And somehow it was like this. You see what I'm saying? So my point is we cannot look at one little piece of information and just determine what is going on in the charts with that. What we need to do is we need to start with the smallest piece of information and then dissect it. It would be much more difficult for me to take 672 candles, all of those 672 candles, trace where they went, and then figure out what that looks like combined. But what I can do much more easily is I can go to a weekly chart. I can say, boom, see that candle right there? I could take that one candle right there and I can say within this candle, which actually kind of looks like what I just drew, but it was blue instead of red. Man, that was pretty cool. So if I look at that candle right there, I know that if I were to break that down into 672 15-minute intervals, that we're going to have some movement up, we're going to have some movement down, and we're going to have some movement up. All right. And if I look at that on the 15-minute chart, all right, so we look at that on the 15-minute chart, and we'd have to squeeze that way in, right? But look at this. That's a lot of information to be trying to squeeze into one candle. You understand that? So the point I'm trying to make is if you're going to scalp the 15-minute chart, it's going to be very difficult for you to do top-down analysis from the weekly because you're literally going to be looking at pages and pages and pages and pages of information just to get one move on the weekly chart. You're going to be going back like this. You know what I mean? Like it's never going to end. So that's a lot of information to be trying to dissect. So what we're going to do is if you're going to trade the 15-minute chart, what I want you to do is I want you to start on the 4-hour. So I want you to start on the 4-hour chart. And you don't need 20 years of information if you're trading the smaller time frames. You don't need 20 years. You don't need to go back to 2003. All right. If you're scalping on the 15-minute or the 30-minute charts, or if you're day trading, you really just need some information to your highs and to your lows. So you need to see where you are currently. And right now, currently, we are pretty low when you look at the overall spectrum. Okay. So now what I'm going to do is I'm going to simply drop a line. All right. I'm going to drop a line on the high. I'm going to drop a line on the low. And now just look at that. If you look at current price, am I closer to the low or am I closer to the high? All right. So I'm closer to the low than I am the high. Now let's look back a little bit. Do we have anything that supports anything lower? Sure, we do. We can go a little lower if we wanted to, right? We come back here. We can go back to September. We can go back to March if we wanted to, right? Before that, we have even higher. We have some lows way back here. But the truth is we haven't seen lows like that in several years, okay? Several years. So what I'm saying is, based on what I'm seeing on the chart, we are closer to the low than we are to the high. So imagine this, imagine if you looked at this like an RSI. Everybody's familiar with an RSI. If you're in advanced class, you're familiar with an RSI. So I want us to build an RSI on here right now. All right. So what we're going to do is we're going to look at this and we're going to draw, and I'm not doing this exact, this is just for the sake of you seeing this, right? We got a 50, right? We got a 70, and we got a 30. All right. Imagine this is an RSI. And then what we're going to do, you know, how the RSI moves, right? You know, kind of up, oversold, or overbought, I mean, and then it drops down, you know, and it comes down here, oversold, overbought, oversold. We understand how the RSI works, right? Look at how the candles are moving. If you look within the context of the larger time frame and you see, where am I currently when it comes to recent information? I don't need to go back 20 years, but where's my middle ground? Where's my low and where's my high? And where am I currently in comparison? Am I to a point where I think we should be looking at turnarounds? Am I at a point where I think that we are overbought, oversold? Do I, you know, is there news that's affecting me? What is the market sentiment right now? Like, understanding some of those principles is going to be key. So I take that information, and then what I do is, let me get rid of this annotation. I take that information, and then it's actually pretty simple. What I do is I just come down from the 4 hour to the 1 hour. Okay. Right. And what I do is I'm going to actually narrow that down some. All right. So we come in here and let's mark the point where we crossed over and retested. All right. So it's actually pretty easy. So let's take a box. And we see where we crossed over. We see where we came in, right in this area right here. And then we see where we kind of retested it in this area right here, right? So from that area right there, it's been steady dropping ever since, right? Slowly but surely dropping ever since on the 1 hour chart. So now it's actually really super simple from there. We go back and we find the structure: high, low, lower high, right? In this area, we got a little flat right here, lower low, lower high, and then we start to move sideways before we end up getting a lower low over here. So what I'm going to do is I'm going to narrow this to here. Where did I get my low? Right there, right? So now I've got from here to here. Now I can literally take this. All of this stuff is irrelevant to me now if I'm scalping. All of that's irrelevant to me now if I'm scalping. Now I took that price and I narrowed from thousands of pips into this level right here. You see that? So based on just market structure, I haven't used any indicators. I haven't done anything. I've taken thousands of pips and I narrowed it down into, so far, I've narrowed it down into 775 pips. This is the zone I'm looking at, okay? This is the 1 hour chart. All right, guys, there you have it. I hope that video brought you a lot of value. I know it did, because, man, look, when we were talking about that math, I seen minds blowing. And, you know, I was actually letting you in on a class that we taught. That was actually part of one of my classes for TTA. So I was kind of giving you a little piece of it. But when you start to understand that one candle on the weekly has hundreds of candles on the smaller time frames, and now you understand why you see these ups and downs, extensions, corrections, waves, right? We understand why these things take place once we are able to see the bigger picture. Once we understand that that little pullback, you know, that downtrend, as we thought, was actually just a pullback. So when you get a bigger picture understanding of the larger overarching theme of what the market is doing, who's in control, buyers or sellers, what is the sentiment in the market, where are we at with currency strength, where are we at in regards to wave theory, where are we at in regards to quarter points. When you start to see all of that and you're able to quickly analyze and see those things, that's going to be where you can take major profits simply using price zones. So don't forget, again, like, comment, subscribe. If you want to be able to see the full class of what we did in that, you know, in that one and many more, over 200 videos, go ahead and go to trendtrading.academy and become a student. Join the team and watch and see how your trading goes to the next level. For now, I'll see you in the next video.